1% plus higher on the Nifty small cap as well. In terms of top sectoral performers, we did speak about the PSU banks, which are up around 1% odd in trade. But you have the Nifty Fin, which seems to have recovered fairly well after a tough couple of days. So definitely a positive. Focus is largely on the banks as well as pharma, but the silent focus will also be on Nifty Metal, which is also up around 1%. But as always on the small and mid cap show, we focus on small and mid cap companies, and we have now the CEO and MD of South Indian Bank who's going to join us. We have R Seshadri who's speaking with us live. On the back of course, numbers, South Indian Bank delivered a decent set, but let's try and get more perspective on those numbers from the MD and CEO. Good morning, sir. It's a pleasure having you here on the Small and Mid Cap Show on NDTV Profit.
Thank you very much, Hersh, for having me on the call. I really appreciate it.
Sure. So, sir, let me first try and break down as to how deposit growth traction is building up, because that seems to be the focus of the industry, at least at the moment, given how the first batch of numbers for the banking sector has come out. How is deposit growth traction playing out for you? 9% odd growth on the deposit side, while the advances seem to be flying away. So there's a compression in the loan to deposit ratio that's playing out for you. Is that one, a very conscious calibration of your LDR? And two, how competitive is the deposit growth arena at the moment?
We've been very consciously keeping deposit growth at a level that is appropriate for us. We grew deposits 9%, we grew assets 11%, as the numbers show. Our pricing on deposits is such as to maximize the NIM. Therefore, as a consequence, our deposit pricing, or the cost of deposit landed at 5.17%, is among the lower rates that the industry has. If asset growth accelerates as we expect it will, we will go there and get more deposits. And we think that there is that we do have a solid deposit franchise which will enable us to increase deposits as we go forward. We also have not just domestic deposits, we have a large constituent of NRI deposits, which make up approximately 30% of our total deposit base, and which gives us the ability to actually increase the quantum of deposits that we have over a period of time.
Sure. And, when it comes to your margins, you are seeing a bit of pressure. I think the industry as a whole is seeing a bit of pressure. Is it largely because the rate pass on is not fully happening? And when do you see this pressure start to ebb, especially for you?
So essentially, it was basis risk, as they call it in the banking world. So for the last year or so, about a year ago, we were enjoying the benefits of assets repricing faster than liabilities, and now we have the inverse. We in South Indian Bank have an advantage. A large portion of our asset book, especially to the corporate side, is very, very short duration. And we've deliberately kept it like that because we believe that as we put out fresh money, we should be able to put it out at the rates which the market will support at that point in time. And therefore, we should be able to smoothen this out. And that's the idea. I think over the next few months, the pressure on deposits will continue. And it's only when structural changes happen to the economy that pressure will ebb.
Sure, understood. And, what about loan growth? This kind of number continues to be sustainable. And, within your loan growth, I also want to try and understand one key piece. Your MSME piece stood out. An MSME book has actually degrown. What's the rationale there? How are you playing that particular piece of the puzzle?
So our loan growth has come largely from corporates, gold, and from personal loans through cards. That's where the growth has come from. Our MSME and agri growth has not been there, and that is an area of focus for us. Historically, we've had some challenges on the NPA side on MSME. Most of that has flown through our book, And we've also invested a great deal on new technology that will enable us to attack this market going forward. So that's an area of focus as we go forward. Our investor presentation talks about the strategy. We want to granularize, which essentially means that we need to go after retail as well as MSME to a greater degree.
Is there also a change in processes that you're seeming to target? Is that also part of the reason why MSME has not grown? And what are those changes that you're looking to make, if at all?
MSME growth in the past was, as you rightly mentioned, degrowing. It is now, the rate of degrowth has reduced very considerably, and we think that we are at a point where it will pivot and it will start growing. We changed our processes to make it more centralized. Earlier, decisions were taken at the branch level. Now it is centralized. Underwriting is centralized. All of that impacted turnaround and so on and so forth. But the new investments that we've made in our loan underwriting systems, etc., should ensure that we have quality with appropriate turnaround times for our customers. And that's what gives us confidence that we should be able to grow it.
Sure. And when does that growth come about? Just very quickly, because I have another question after this.
It should start this quarter. We don't think that our MSME book will continue to degrow. I think it should start growing from now, and it should continue to grow thereafter.
Sure. So that should start aiding loan growth as well. But last off, where should we see South Indian Bank? So you currently have a book of sub 80,000 crore. Where should we see it 3 or 4 years from now in terms of two metrics? One is on your loan growth, and second is you've crossed the 1% ROA threshold. Where does it go from here all the way up to the next 3 to 4 years?
We are actually at this point in time working on a long-term strategic plan. We expect a very significant growth both on the balance sheet size as well as we hope to continue to keep this 16+% return on equity that we've delivered this quarter. On a long-term basis, we'd like to go north of here. But at this point in time, we don't have specific answers to your question.
Sure. So maybe once, next quarter or maybe prior to that, once we have some kind of visibility, we can have you back to try and give us that kind of visibility. Perfect. It's been great speaking with you, Mr. Seshadri. Of course, that's on the back of South Indian Bank's numbers and giving us all that perspective. Thank you so much. Let's slip into a very short break. More on the other side. Stay tuned to NDTV Profit. We have with us Lalit Kumar Khetan of RK Forgings to break up those numbers. Welcome back. Thanks for staying tuned to NDTV Profit. We have with us Lalit Kumar Khetan, who's the ED and CFO at RK Forgings, joining us with regard to numbers. Good morning, sir. It's a pleasure having you here. So I want to first try and understand you've put out an ambitious plan with regard to expansion. You're moving up from the 2 lakh odd ton mark to the 3 lakh ton mark plus. How quickly do these numbers start adding up within your capacity? That's my first question. And also, what does that do to your revenue?
Good morning, Hersh. So whatever the plans are there, they are for quite some time. And if you look at our presentation or whatever we have guided, we are adding this capacity in the phased manner. So first set of 32,000 tons are going to be added very nearly, maybe in next 15 days or a month time. Then cold forging will start in Q1 FY25 and another 8,000 ton press along with some small presses will start by December 24. So all these will take the capacity to around 310,000 tons in RKFL standalone. And certainly this is a well thought out expansion and in line with the future forecast and what we are looking at our growth. And what guidance we are giving on the standalone, we should grow at least 20% per annum on volume terms, and we are able to manage that, and we are very much poised to achieve that kind of growth. And that you can see in our numbers quarter on quarter and year on year.
Right, and how's the demand traction, sir? Given the fact that you've put up sizable capacity and it's right up in the pipeline, how's the traction with regard to orders coming through? What's the feel on the street like?
So we have a quite healthy demand. I would say. In our industry, we don't have order book. We always get schedules and forecasts. So whatever schedules we have right now in hand and the forecast we get from our OEMs, on basis of that, we can project our future production and capacity planning. And from that, we are in a very comfortable space and poised for quite a good growth. Though markets, certainly if you look at the market, there are some headwinds in the exports or moderation in the growth, but that is temporary and that will be, I think, be taken care in 1 or 2 quarters. But at RKFL, we have already healthy orders from those OEMs, even in domestic as well as export market, and we are going to do better than what we have done in Q3 in upcoming period.
Understood. And would your margins therefore sustain above the 20% mark? Is that something that you're reasonably confident of doing?
Yes, certainly margin are very much sustainable right now what we are there, and our endeavor is to rather further improve on that. And so there is no doubt on improving upon the margin from here on.
So, you'll have quite a bit of free cash flow coming your way, probably 1,000 crore plus if I'm doing the math right. Please correct me if I'm wrong. That's point number one. Point number two is that what do you do with this free cash flow? You have around 1,500 odd crore of debt.
No, so Harsh, if you look at the free cash flow, it can be somewhere around that what you have said. But certainly we have capex plan every year. We have to spend 300-400 crore in the capacity expansion. And right now, what plan we have made for next year or already in the public domain, that will also take some share out of that. There are some maintenance capex we have to do. And once you grow, there has to be some working capital requirement also. But putting all together, that also we will have 300 to 400 crore surplus. And that will go to reduction of debt. And so my debt will be toned down. If you look at next 1 year, whatever numbers we are looking at FY24 in terms of debt, that will be substantially down in FY25.
So would that mean by FY25 you will be debt free? You currently have roughly 1,600 odd crore of debt, if I'm not wrong.
No, I think your numbers are quite, I think, backdated as we have raised 1,000 crore QIP in the month of November. Sure. So my net debt is around 600 crore right now, and it will go down to another 300-400 crore in next financial year, and we will be debt free if we don't do any further acquisition or capex and streamline all these things. Then certainly we will have the cash on the balance sheet in FY26.
Understood. And therefore, could one start expecting you to, with regard to your capex itself, how should one see your capex, play out over the next 3 to 4 years? If you can help us break that down, please.
So, Harsh, it's very difficult to say what will happen on the capex for next 3-4 years. But going by the trend, what we look at, and we keep on looking at the growth opportunities and adding capacities as per the market demand and my customers' requirement. So we will keep on working on that and try to put on the capex every year around 250 to 300 crore. That's the budget we always have to grow the capacity and value add the capacity in terms of having more complex product or automation. So a lot of things we are working upon that. So we will keep on looking at those avenues. And for if you want to be specific, next year the investment and capex together will be having a 400 or 450 crore of outbook.
Understood. Thank you, Mr. Lalit Kumar. It's been a pleasure speaking with you, trying to understand some of those numbers as well as the future growth potential that RK Forgings has, as well as the guidance with regard to how debt will go about. It's been good speaking. Thank you so much. But quickly moving on, we also have Ajit Venkataraman, who is the Managing Director at Sensex Industries, who's going to join us now. Good morning, sir. Welcome to NDTV Profit.
Good morning to you.
Right. So I want to try and understand how volumes are shaping up, because there seems to be a bit of compression or continued sustained compression with regard to volumes. When do you see that recovery starting to play through? And if you can give us some, some bit of visibility both on the pipes and fitting side as well as on the PVC side of things.
Sure. So in terms of profits, EBIT margins for 30.5.
Sir, apologies.
Yes.
I think we have you on a slightly patchy line, so we'll wait for that line to get better. But very quickly, to try and break some of these numbers down with regard to Phenol X and how they've come out with, or what's the kind of numbers that we've looked at. We've seen a bit of compression when it comes to the volume number at Phenol X. And therefore, you're seeing a bit of compression with regard to the top line as well, around 9.5% of compression on the top line on a year-on-year basis. Even though on a sequential basis, the numbers look slightly better. EBITDA, though, has come out up trumps. It's come 31% higher on a year-on-year basis, and therefore, your margins have gone up quite substantially. Need to understand the sustainability of that kind of margin number and whether we can go up from there. And profit after tax, as a result, has gone up by roughly 20-odd%. But we do have Mr. Ajit back with us. Welcome back, sir. So just want to try and I hope now it's clearer.
It is better.
Perfect. Okay. So let me try and get that. Not sure if you got my first question with regard to volumes. Please go ahead.
Yes. So volumes did drop a bit, 10% overall. In terms of revenue, it was down 10%. But mostly it is coming in the back of drop in resin volumes, which dropped by almost 32%. And one of the main reasons behind this is availability of raw materials because of disruptions in the Middle East. So that is mostly the reason why our resin volume has dropped. And as a result, you can see the impact on the revenue itself. Overall volume, we had about 82,000 metric tons for pipes and fittings. This in comparison to Q3 of FY23 was approximately 90,000. So there was a drop, but Q3 FY23 was the highest volumes ever. And this was on back of pent-up demand, which had happened prior to that in terms of the COVID period. So matching Q3 FY23 would have been difficult, but the volume has been robust. And the profitability has also been robust. We have very clearly seen that EBITDA margins are up 30.5%. Going forward, we don't see any change in fundamentals. The construction industry is growing quite robustly. Yes, we did see a slowdown in agri segment starting late Q2 and existed almost throughout Q3. And this is mainly due to the price-sensitive segment that agri segment is. And there has been a little bit of a volatility in the PVC prices. And as you can see, the PVC prices have hit the lowest, and the network has been a little bit slow in taking on inventory. So this has been seen throughout Q3. and therefore you have seen a slight drop, but we expect it to pick up in Q4 because Q4 and Q1 are the strongest quarters for the pipe and fitting industry.
Sure, understood. So demand should pick up, but prices should stabilize as well very quickly.
See, we expect that the PVC prices have hit rock bottom. It is in the range of $750 to $770 per metric ton. And we expect the prices to start going up soon, or at least remain at this level, because I don't think it is going to go further below than this.
Understood. And what does that do to margins? Your margins have seen an uptick clearly. Talk to us about the levers of margin expansion in this quarter as well as going forward, and where should we expect that number?
Sure. See, the margins, if you look at the stable levels before COVID, it used to be in the 7 to 8 rupees range. We have started seeing the 10 to 11 rupees per kg range. And this is mainly due to the product mix that we have got. And we expect that the non-agri will continue to contribute more towards our overall business. And as a result, the rupees per kg will be growing towards the 12, 13 rupees per kg in the next 2 to 3 years. And that is driven by the product mix.
Sure, understood. One quick one, I want to try and understand from you how the numbers with regard to top line will grow as a result of all of this. So we've seen that from FY22, we've largely been at that flatline kind of a number in terms of top line. Should we expect to see a bump up right up front in FY24 itself, or would you wait for FY25 to see that number go up?
See, the top line is a very difficult measure to track at this point of time because of the volatility in PVC prices. So we track much more of the metric tons of material, which we expect to grow anywhere for the industry to go between 10 and 15%. Top line is completely dependent upon the PVC prices.
Got your point. Okay, thank you, Mr. Ajit, for that quick conversation with regard to how Finolex is shaping up in terms of its numbers, as well as Q3, how the numbers have shaped up. Thank you. With that, we're completely out of time on this edition of the Small and Mid Cap Show. We have markets largely where we left them. We're roughly at the 0.75% odd higher on the Nifty 50. No complaints after the kind of week that we've had. But for now, it's a goodbye from all of us here on the Small and Mid Cap Show. More on NDTV Profit on the other side, so stay tuned.